So welcome and thank you everyone for giving up your time today to listen to this important webinar. I certainly hope you'll find our time together valuable. For those of you who don't know me, I'm Ian Weir of Weir Associates. Here's my contact details along with a picture of myself so you know who you're listening to. I'll keep my camera off until the Q&A section near the end so you can concentrate on what's on the screen in front of you instead of being distracted by a video of me. So before we get into the main content, I just wanted to share with you a bit about Weir Associates, our core purpose. Quite simply, our core purpose is to make business owners' lives better. And we achieve this by working on three areas with business owners: their time, their mind, and their financial freedom. These three areas are foundational to our core accountancy and tax services, along with our business improvement services. We're with you, we're together, and we're as one. As well as our core purpose, we also have four core values. Simplicity. Why complicate things? Let's keep solutions simple to achieve that end goal. Purpose. Constantly questioning if there's no purpose in what we're doing, then we need to ask ourselves why we're doing it. Family, show support and consideration for each other. And finally, respect. Respect the people that we work with and the environment in which everybody lives in. So hopefully after today's webinar, I'll have given you a simple roadmap to follow for your business success. Now, before we finally get stuck in, I just want to throw in my usual disclaimer that the information in this webinar is educational and general in nature and no substitute for tailored advice specific to your particular circumstances. Also, when you leave the webinar, you'll be taken to a feedback form, which I'd really appreciate if you could fill in. So let's finally get started with our thought for the day. Live as if you were to die tomorrow. Learn as if you were to live forever. Now, I'm passionate about small business owners getting more from their business, but it's important to understand that there are no magic bullets here. Today, I'm going to share some practical things you can do to improve your business, but there's no substitute for ongoing hard work, working on your business, not just in it, and working in synergy with somebody like your accountant. Before we begin, I'd like you to consider what business success would actually mean to you. Would it be more profit, or is there more to it than that? What do you really want? And how will you balance work and play? What does your business need to deliver to you? A successful business, in my eyes, is one that delivers on those three freedoms: time, mind, and financial freedom. And today I'm going to take you through the 10 steps you can take to achieve those three freedoms. Unfortunately, though, as business accountants and coaches, we see far too many clients not achieving these, working crazy hours, getting burnt out, and not spending as much time as they'd like to do doing the things that they love. Now, I'm sure most of you are absolute experts at the technical aspect of your business, but today is in part about reflecting on what you are not so good at. Perhaps that's understanding your numbers, or creating and implementing a simple business plan, or perhaps you need to lead the business and the team a bit better. These are all things we can help you with, things that you can improve. We want your business to serve you and not the other way around. So here's what we're going to cover today. It's vital that you write down the actions you're going to take after this webinar. If you get at least 3 actions written down that you can put in place in your business after today, then that is going to be a huge success. So today I'm going to share with you what the 10 steps are, the what and the why, best practice in implementing what I'm going to be sharing with you today, next steps that you can take, and the available options of support for you. We'll have some questions, a live Q&A, and then it's accountability time. As I said, when you leave the webinar, you'll be directed to a form where you can decide what you're going to do as a result of coming along today. and of course, give us that important feedback. As I said, I want you to come away from this webinar with at least 3 clear actions that you're going to take that will make a big difference to you and your business. Now, if you don't write down those actions, you won't remember them. Just as if you don't write down your business goals for the next year, you'll be far less likely to achieve them. I want you to get maximum value from this session. So if you've got any questions as we go along, like I said, please put them in the Q&A button. And likewise, if you have any insights you want me to share with other people here today, please put them in the chat or in the Q&A, and I'll share them with everybody at the end. So, step 1, get clear on exactly what you want. On the screen, we've got the be, do, have principle. Now, so often we are so caught up in the have, do, be. And that is, when I have, then I will do so that I can become. So something like that might be, when I have an extra member of staff, I will be able to give them some work so that I can free myself up to spend more time with my family. Instead, we need to flip that on its head, and we need to think about who we want to be and then what we must do to be that person so that you can then have. So in that previous example, wanting to spend more time with your family, who do you want to be? You want to be a better parent that spends more time with her family. So what must you do? You must go and recruit somebody to take some of the work off you. And then that will enable you to have the time with the family. So ask yourself, who do you want to be right now? Is it a better parent? Is it a better leader, better husband, wife, better business owner? But write down who you need to be so you can start doing the things you need to do in order to get what you want to have. Now, I'd just like to do a little exercise. If you've got a pen and a bit of paper, just write down what you love doing, both inside and outside of work. Highlight at least 3 things you want to do more of, both inside and outside of work. Write down 3 things you want to stop doing or pass on to others, again, both inside and outside of work. Write down how many hours per week you'll commit to each of the things that you love doing, and write down what holidays you want to have, where they're going to be, when they're going to be, and then block that time out your diary. And write down how much income you need to deliver for this new life. Don't worry about the how yet, just write the number down. Once you've done that, each of you now have your own personal plan. Make that visible in some way and start working in this new way now. Remember, you've got a choice. Nobody's a victim. Nobody else will create your future for you. Get into the mindset that you need to be who you want to be now. Start doing the things that you must do to be that person so that you can ultimately have what you truly want. Step 2, be open to change and new learning. How many new things does a 5-year-old child learn in a day? How enthusiastically do they embrace the world of possibility, the desire to learn and improve? How easily do they give up? Why is it that as grown-ups, we forget that 5-year-old mindset and we close our minds to new learnings? Especially these days, new learning opportunities, they're absolutely everywhere. There's simply no excuse to avoid keeping learning. And here are 5 ways to learn more so that you can run a more successful business. Resist the urge to hang out on your phone. That is, of course, unless you're reading something that will teach you something new. It's so easy to get distracted by social media, and all of a sudden you've just wasted half an hour. Enroll in courses and workshops. Obviously, online has been huge the past year, and hopefully we'll be getting back to in person. But choose topics that are going to help you in your business. Equally valuable, podcasts, you can listen to when you're stuck in traffic, face-to-face workshops, seminars, etc., when they come back online. Read more, both recreational and business books, even if it's just 10 pages a day. It will all add up. And if you're not into reading, get Audible books that you can listen to on your car, in your phone. Keep a journal of your learnings. Why? This means you'll be able to easily revisit them later. And remember, you don't truly know something until you can teach it to someone else. And finally, turn off your TV. Spend that time reading or listening to podcasts, Audible books instead, learning new things. So what is it that you need to learn more about? Is it leadership? Is it business management? Is it sales skills, marketing, accounting? Whatever it is, I would encourage you to write it down now, together with what you think will be the best way for you to gain this knowledge. Also, set yourself some targets. Like I said, perhaps that's just reading 10 pages a day or listening to one audiobook a month. But set it, write it down, and once you've written it down, I'd encourage you to share your target with someone else and keep a record of how you're going and start today. Step 3, define where you are now, warts and all. The first 2 steps were all about getting clear on exactly what you want and then being open to change and new learning. Step 3 is about defining where you are now, those warts and all. This is so often overlooked. Now, if you're using Google Maps to get directions, what does it ask you? It asks you what your starting point is. It needs to know where you are now so it can tell you where you want to go. While this seems really obvious, too often business owners try to make a plan without fully understanding where they're starting from. And when I say warts and all, I mean that you need to have a very honest and accurate understanding about the following 5 points. The degree to which owners and the leaders are aligned in their thinking. If they were asked independently where their business is headed, would they all say the same thing? The current level of activity that is generating the sales numbers and returns you're achieving. It's not just about the sales numbers themselves. For example, how many leads are you generating per month? How many proposals are being written and accepted? What is your average sales value? How many networking events are you attending or even running per month? You need to know this in order to improve. The third one, the extent to which your team has bought into your plan, your culture and your core purpose. Without the team on board, you will not achieve leverage. A study in employee engagement showed that 30% of employees in companies were engaged, 52% were disengaged, and 18% were actively disengaged. The studies also prove that businesses with engaged team members significantly outperform those without. The appropriateness of the measurement and reporting systems you have in place to track your results. It's all very well to set those targets, but if you can't measure them, you'll be flying blind. And your 5 biggest vulnerabilities right now. What are the things that are most likely to break in the near future? For example, have you got poor systems? Have you got a high team member turnover? Cash flow strains, coming out of the pandemic. Have you got a weak balance sheet? Things like that. So just as Google Maps asks you for your starting point, before you start making a plan to head somewhere new, you must understand where you are right now. Please do not ignore this step. You do so at your peril. So to recap, first 3 steps. Step 1 is getting clear on exactly what you want. Step 2 is about being open to change. And step 3 is knowing warts and all where you are right now. You're now ready for the next step. Step 4, making a clear plan. Remember that the business is there to serve you, not the other way around. You should not be a slave to your business. So refer back to step 1, where you recorded who you want to be, how you want to work, and the hours you are prepared to put in. Build your plan around what you want personally from the business. So, as a quick example, if you need £100,000 per year to cover your living costs and family holiday, so £100,000 of profit, and you know your overheads are currently £100,000, then that means you need to generate a gross profit of £200,000. Now, if your current gross profit margin is 50%, then your annual sales will need to be £400,000. But let's say you want to take 46, you only want to work for 46 weeks of the year. What does that equate to per week? That 400,000 divided by the 46 equates to a sales figure of £8,695 per week. If you can improve your margin from 50% to 52%, so only 2%, you will only need to make 8,361 in sales per week. So you can now see why you need to understand your current situation. And a budget like this should form part of your plan. And make sure your plan is linked directly to how your business will deliver on your personal goals. That profit for you so that you can do the things that you want to do. Now, when you make a plan, follow these rules for creating that solid plan. Keep it on one page, 2 sides if you must. Identify no more than 4 main goals for the year. If you've got too many goals, you're going to struggle to achieve them effectively. Cascade your goals. Cascade those annual goals into 90-day goals. Identify the actions you need to complete in order to achieve those goals. Identify no more than 5 KPIs, key performance indicators. Any more and you're likely to lose focus. Share the plan with your team. Their personal career goals should be linked with your plan. Help them to define their own actions and KPIs, and these should be recorded in their job description. Keep the plan highly visible to your team. Track your progress against your plan and celebrate success along the way. And finally, review your plan at least quarterly. Have someone independent hold you accountable. Remember, a dream written down becomes a goal. A goal broken down into steps becomes a plan. A plan backed by action makes it reality. Your business plan is your how-to guide to achieve what you want in life. It's the fundamental document to your entire business. So let me just ask you this: how good is yours? Step 5, get your organizational structure right. Have you ever heard the saying, start by getting the right people in the bus, the wrong people off the bus, and the right people in the right seats? But what if your business isn't a bus? Maybe it's a jet boat with only 2 seats. Maybe it needs to be a train with multiple carriages, a great driver and a conductor connecting all those passengers. Whatever it is, step 5 is all about getting your organization structure right. This should allow your revenue to increase without creating any bottlenecks or overloading team members or causing errors or mistakes. Bottom line returns should then increase at a rate higher than the revenue increases as the business becomes more efficient and achieves some economies of scale. The organization structure It shows the departments in your business, who's responsible for what, whether they're an employee or an external contractor, and how this hierarchy all works. We call this the 10 hats organization structure. At the top, we've got the shareholders, and below them, we've got the directors who set the direction. And then we get into the operational side. We've got the leadership, the CEO or the general manager who make sure that everything happens. And then we've got the product service development, operations, marketing, sales, finance, HR, admin, and IT. But remember, there should only be one leader of the business and one leader for each of these 10 departments. However, one person can wear multiple hats, but there can't be more than one leader for each department. So for example, the leader of the admin and IT department may also be the leader of the finance department. But make sure that there are team members in training to start wearing some of the hats that the business owner is currently wearing. If you don't currently have a team, you need to start thinking about how you can stop wearing some of these hats. Each role should have a clear job description with no more than 10 key responsibilities. And each key responsibility should have clear tasks and KPIs flowing from it. And please remember that nobody can manage more than 5 people effectively. So create teams within departments, each with a team leader if you need to. Review your structure regularly and update the key responsibilities if and when they change. In other words, keep your structure as a living and breathing document that your team will understand. Check in with your team regularly. Ensure that what they are doing aligns with your structure. Ask whether there have been any changes in the team member's role at each performance review. Then make sure that they are the right person to be doing those tasks. If not, reassign them to the correct person who should be doing those tasks. Valuing the opinions and contributions of your entire team is hugely important. However, having a clear hierarchy is key to avoid bottlenecks. Make smart and consistent decisions and manage risk as your business grows. It also provides clarity for the team and an opportunity for them to see advancement. Step 6, be a better leader. Build a strong workplace culture. Have you ever asked yourself if your workplace is toxic? The average person spends more than 40,000 hours of their life at work. That's one heck of a long time if your work environment isn't fun. Even worse if it's toxic. A toxic workplace generally will exhibit some or all of these following characteristics. A lack of trust between the owners and the team. A sense of them and us. No core values, or worse, core values that aren't lived into, because that just breeds that lack of trust. After meetings, those coffee or desk chats where team members bag the person who led the meeting that just happened. Highly stressful interactions are the norm rather than the exception. And team members and owners mistreating each other, working in self-serving ways instead of for the benefit of the team, especially if this is done behind team members' backs. And no team buy-in to core purpose or goals, or complete absence of any purpose and goals. As Peter Drucker said, culture eats strategy for breakfast. We simply cannot afford to operate with a toxic workplace, and the opportunity cost of not investing in our workplace culture is huge. Take an honest look at your business through these points and then follow these simple steps. Use a collaborative approach to set no more than 5 core values, each with a simple definition. Define your core purpose. Why does your business exist for your clients? Check out Simon Sinek's video, Start With Why. You'll find it on YouTube. Make your purpose and core values highly visible. Ensure each team member has memorized them and hold each other to account for living into them. Break down your plan into goals and actions for each team member. The sum of the individual teams will deliver on your overall plan. And celebrate success. Give recognition to team members for great performances and meet your team regularly. This ensures you support them effectively and address any minor issues before resentment builds. Actively discourage those meetings after meetings. People should contribute openly at the appropriate time. Stop playing favorites. Give equal opportunity for your team members to grow and shine. Avoid being held to ransom by toxic employees. Open the door of opportunities for anybody who is that toxic employee. And have fun at work. Building fun or resilience exercises into the working week helps people refresh and also helps them find their flow easier when they get back to the workplace. To quote Henry Ford, coming together is a beginning, keeping together is progress, and working together is success. Step 7. This is all about accountability. There's only one way to ensure that the actions you commit to get done. Give someone those nagging rights to follow you up. Let's just think about how 99% of people approach their New Year's resolutions each year. They start with the same ones that they didn't achieve last year, don't they? Similarly, if you set a goal to go to the gym regularly, simply having a gym membership will not be enough. Most personal trainers are primarily there to make sure that their clients show up. Without a personal trainer, it'd be far easier to put off a gym session and just justify the decision with a below the line excuse. So what are the best people to hold you to account? Again, using the sports analogy, do successful teams want hard or soft coaches? I think the answer is obvious there. They want a hard coach. It's the same in business. We all need someone who has the backbone to hold us firmly to account and to dish out consequences to us for any failure to act. A life partner or friend most often won't be hard enough on us. They'll be more likely to let us off because they don't want to upset us. On the other hand, a hard coach is not so much worried about upsetting us in the short term. They're simply being a stand for us, achieving the results we say we want to achieve, which in the long term will make us much happier. Great coaches demonstrate more than backbone though. They also demonstrate heart. That is, that they care that we achieve the goals we've set. That's not to say that they're soft though, but their approach is all about what we need to do to achieve the goal we have set. So who do you use as an accountability coach? Make sure you select someone with that essential backbone and heart. Step 8, build strong networks. Lots of businesses generate the vast majority of their new business from referrals. And the great thing about referrals is that they don't have to cost you much or even anything at all. The best place to gain new referrals is by connecting and networking with your existing clients and people you already do business with. So how can you maximize referrals from your networks? Here are 5 ideas that you may want to consider. Consider the lifetime value of a new client to you and what you can do for them. So let's say you own a restaurant. The average customer spends £100 each time they visit, and they generally visit about 6 times a year. And the restaurant's gross profit margin is 66%, so 2/3. And their customers generally keep returning for around 5 years. So the lifetime value of the restaurant's customers would be the £100 per visit times the 6 visits times the 66% profit margin times the 5 years. And that comes to £2,000. So with that value of £2,000 in mind, what could they give to their customers to demonstrate how much they appreciate their repeat business? It could be something just as simple as a complimentary drink. But if you do that for your customers, they will certainly start spreading the word and telling people, about the great experience that they had at that restaurant. Secondly, identify the businesses you work with that complement your services. So for example, a surveyor may work with lawyers, valuers, bankers, accountants, tradespeople. They can create an informal group of these people who work well together and then commit to meet regularly, on a social get together maybe, and focus on how they can work more effectively together, or simply use the time to be a bit more social and have some fun and get to know each other a little bit better. Give more referrals than you seek in return. Focus on referring more work to your network than you seek back. When you give work to others, it will create a desire in them to give back to you. This is called the law of reciprocity. When you do something nice for someone, they'll often reciprocate with a gesture far more generous. And hopefully, in this case, more referrals. Find out where your target market hangs out, where they hang out in great numbers in the world. There may be existing networks that you can join that refer work to you when you join them. Some examples of these: BNI, the Rotary Club, Chamber of Commerce, things like that, etc. But try and find out where your target market hangs out, or the complementary businesses that serve your target market hang out, so that you can start passing referrals between each other. And finally on this list, sponsor, get involved with voluntary or non-profit organizations. Choose something that you or your team are interested in. It might be a sports club or a charity, but whatever you do, don't peddle your wares or try to sell when you attend these clubs or events. Just wear some branded clothing, have some signage up if you're allowed, and prospective customers need to know you, like you, and trust you before they will buy from you. So which of these 5 ideas do you think you could implement today? Step 9, monitor your progress to your targets. When you're driving, there are 3 things that you look on in the dashboard: your speed, your fuel level, and the engine's temperature. It should be the same in your business. What are the 3 to 5 most important things, KPIs, key performance indicators, for you to keep an eye on? How do you decide which are the most important, and how do you calculate them? I've got a 4-step process that you can use to create your own dashboard. Step 1, first you need to understand which KPIs have the greatest influence on your ability to achieve your goals. So for a professional firm, this might be the average hourly rate invoiced, not put in a timesheet, but actually invoiced. For a contracting firm, it might be your gross margin for any job. For a retailer, it could be the average transaction value for the day or the week. But first, you need to understand which of the KPIs have the greatest influence on your ability to achieve your goals. And remember, when we're discussing where you are now, warts and all, you worked out the current level of activities that's generating the sales numbers and returns you're achieving now. Step 2, work out how you'll measure those 5 KPIs. Make sure the measurement process is automated wherever it can be. So for example, if you want to measure your gross margin by job, You'll need to dissect your income and expenses on a job-by-job basis. If you want to measure average income per client per annum, you need to measure your revenue on a rolling 12-month basis and then divide that by the number of clients you have. So step 2, work out how you'll measure the 5 KPIs. Step 3, from here, you need to set up a simple one-page report like the one on the screen that you can produce on a weekly or monthly basis to track your progress against those 5 KPIs. Make sure you allocate time to go through this report every time it's produced and share the results with your team. And finally, step 4, repeat these steps with your individual team members. The KPIs for team members will be different to the KPIs for the overall business, but they need to positively impact those overall KPIs. So establishing KPIs for each team member also lets them understand the definition of what a great day's work is for them. And monitoring and reporting those KPIs regularly will help your team know if they're on track or not. The last step, step 10, keep your well of happiness full. Whilst I have this at step 10, it should be something that you focus on all the time. Just as the airline team will tell you to put the oxygen mask on yourself before assisting others, you need to look after number 1 at all times. What are the things that fill your well of happiness? These are the activities that restore your energy and resilience levels and help you to face the challenges in business. They might be activities like dancing, yoga, golf, mountain biking, or it might be reading books, walking in the forest, or meeting up with friends for coffee. Most likely, there are the things you just don't have time for now. But of course, you have the time. You have just as many hours in your day as everybody else. You're just choosing not to spend your time on these happiness activities. Make a list of the activities that make you happy, the things that you're putting off doing because you think you don't have the time. Now make a commitment to yourself. Make a commitment to spend at least 1 hour per day doing the things that you have listed, and share that commitment with the person who you have asked in step 7 to hold you to account. And keep a log of every time you do these activities in your journal, until they become an ingrained habit and just part of your life. So in summary, the 10 key steps to business success are: get clear on exactly what you want. Be open to change and new learning. Define where you are now, warts and all. Make a plan. Get your organization structure right. Be a better leader. Build a strong workplace culture. Get someone independent to hold you to account. Build strong networks. Monitor your progress, and make sure you keep your well of happiness full. So, next steps. There are several ways we can help you to achieve your goals. For those of you who don't have a business plan, we can help you to develop a one-page business plan. We'll work with you to gain absolute clarity on what you want from your business. We'll help you set your SMART, or as I like to call them, SMART-E, the E being for excitement, but your SMART goals for the year, and we'll identify the 90-day goals and actions required for you to achieve them. The investment in this service is from £1,200 plus VAT. Or we can develop a 12-month annual forecast for you so that you understand what the expected sales, margins, overheads, and profits need to be in each month for you to reach your financial goals for the next year. You can then monitor your performance on a monthly basis and ensure you're tracking towards your targets. The investment in this service is from £750 plus VAT. Accountability. This was step 7. We can provide that independent accountability to you achieving your goals. We offer quarterly, bi-monthly, or monthly accountability coaching with momentum calls between each session. The investment in this service is from £150 plus VAT a month. And finally, you can arrange a free complimentary 1 hour proactive business meeting with us. This will give you the chance to discuss your burning issues and how you can best overcome them. Whatever you need help with, remember, it's likely that you're going to need to get out of your comfort zone. Whatever you decide to do, just commit to getting started now. One of the biggest problems in business is FTI, failure to implement. If you don't write down the actions you need to take, you just won't do them. So what 3 actions will you take after attending this webinar? What projects do you need to begin to start solving the problems you've been experiencing in your business? Doing nothing is simply not an option. Remember the definition of insanity. It's doing the same thing over and over and expecting different results. We need to do something different. Before I answer your questions, I just want to share with you something Desmond Tutu said. There's only one way to eat an elephant, a bite at a time. I appreciate I've covered a huge amount today and your mind is probably whirring around with all the projects and actions you're wanting to already get started on. But decide what bite you're going to take first and commit to it. And remember, the best time to start is yesterday and the second best time is today. So, questions. Let's have a look at questions. A coach with a carrot and a stick approach. It's a coach that obviously, you know, like I said, they are there to give you the truth, the honest truth, you know, about where you are, but they are there to support you and guide you and help you make those decisions to move your business forward. It's about having that backbone to talk to the business owner who you're working with, to tell them or to help them see the problems in their business and how they can overcome them, but also to have that heart, you know, they understand that these things are difficult, people getting out of their comfort zones and having to do things that they're not perhaps, you know, that comfortable in doing. So thank you for that one. How often would you run coaching sessions with us? Are they weekly, monthly, or bi-monthly? What is the best way to approach this for my business? Well, as I said, we run coaching sessions. They can either be monthly, bi-monthly, as in every 2 months, or quarterly. We wouldn't recommend anything more than quarterly because that's just too much of a time lag. But what is involved is that we send out some pre-work to get your thoughts on paper so that we don't spend our time together talking about that. We then review that pre-work so that we understand exactly where you are at the moment. And then when we meet, we can have a really good discussion about any of the problems that you're facing in your business and that you want to overcome. And at the end of that meeting, we'll have written down actions with key dates and who's responsible for what. Obviously, if it's a monthly basis, it'd be for the next month. If it's bi-monthly, 2-month actions, quarterly, 3-month actions. But between each meeting, we'd then have a momentum call. So we'd ring you up, check in with you, make sure that you're getting on with your actions, asking you, you know, how you're getting on, and talking to you about any roadblocks that you may be facing, overcoming those. So hopefully that's answered that question. So somebody has asked about just new clients. Okay. new clients. So we sort of said building networks and stuff. To get new clients, marketing, marketing and having conversations. Marketing is all about making sure people know you exist, who you are and what you do. And once they start to know that, it's about having conversations. The more conversations you have, the more you're going to understand the people who are looking at your marketing and looking at you to give them solutions to their problems. So just get yourself marketing out there, however, you choose to do that, whether it's networking physically, whether it's going out on LinkedIn, Facebook, things like that, just get out there, market yourself, have conversations and start measuring it, because measuring things, when you measure things, they get done. So measure, the amount of conversations you're having on a weekly or monthly basis. Set yourself targets around that. Okay, somebody else has asked, any tips on confidently showing current potential clients the value we provide their business is more than just data entry? I think in your question there, you've said is more than just data entry. So that kind of says to me that, that you kind of just view it as just data entry. So what I would suggest you do is that you sit down and you actually write down exactly what it is you do, step by step, but also sit down and write down what it's taken you, so qualifications, time, etc., to be able to do what you do. And then you need to be able to explain that to your clients and potential clients. This is the process. It's not just tapping on a keyboard and hitting a button, or just hitting a button, and remember that value, you talk about value, value is the perceived worth of something. So try and put what you're doing in their terms. So what I mean by that is, if it would take them 4 hours to do what you're doing, try and find out from them how much 4 hours of their time is worth. And then hopefully whatever value they place in that 4 hours will be more than you're going to be charging them. But having said that, even if it's the same or even just a slightly little bit less, they may still value it because it's taking away hassle, headaches from them. So sometimes, the value doesn't always have to be monetary. Okay, somebody else has asked about what are the pros and cons of looking for capital investors? Well, capital investors, they can really help to give a company, an injection of cash that can really enable that company to scale quicker than perhaps they could have done so organically. Obviously the cash can be used to improve any products, services, just the whole structure of the business, quality of staff, things like that. But, it may even come with the promise of a board director, which would help guide the business forward. So, it can bring some great positives, however, there can be, some cons to it. Downside could be the founders are giving away part of the company that they've built. They feel part of their life. Investors, they don't always have the same agenda as the founders for the future of the company, and it's so key to make sure that the investors and the founders, are completely aligned. And sometimes I've seen it myself, the investors' demands become all-consuming, as they want to know more and more, and they want to influence more and more within the business. It can become very, very, very controlling. But having said that, when it's got right, it can be fantastic. Yes, the founders have given up, part of what they've built, but I'm sure that the bit of the larger pie that they end up walking away with will be more than had they not had that investment at the start. So I'm just having a look at the question box. I think that's the end of the questions at the moment. So finally, I just want to thank you for making the time to attend the webinar today. I appreciate, that everybody's time is valuable. Certainly hope that you've enjoyed our time together today and that I've given you a simple roadmap that you can follow for your business success, whilst also giving you some clear options for how we can support and help you should you need it. As always, if you've got any more questions, then please feel free to contact me or connect with me on LinkedIn. And don't forget to fill out the short form and give me your feedback when you leave the webinar.